I think there may be some truth just in terms of what we heard from Tom as that rotation out of metals continues. Certainly not slowing down to kick off the week. As we bring up the chart in silver, it's about 30% off here.
This is more akin to the end of the selling, not the beginning.
So you don't think that we're seeing another leg lower?
Well, for instance, Ethereum might go to 2,400, but it's a touch, and then that's the bottom. But that's going to coincide with precious metals peaking. I mean, remember, precious metals has sucked all the risk appetite out of speculation, out of crypto, right? A lot of it's come out of crypto into precious metals.
It's like unthinkable 6 months ago.
Today's episode is sponsored by Brave. Brave blocks ads and trackers on every site, even YouTube, but it also has crypto rewards, a secure multi-chain wallet, and private AI, all built right into the browser. It's time for a user-first web. It's time to switch to Brave. Welcome in, everybody, to another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York as we are watching what is, hopefully, after a big sell-off, a bit of a bottoming process, as the crypto fear index spills over into extreme fear, watching Bitcoin try and hold on to that 75K-ish bottom here. And we're seeing a bit of a rebound in today's session around that $78,000 mark. Want to check out also Ethereum as we are seeing this bottoming process play out. We're going to talk about why Tom Lee thinks that 23, 24 level is about right for a bounce here, as both he and the other big DAT king, Michael Saylor, of course, step back in with new buys that we will be discussing. Also, a big chat coming from the ETHDenver founder. John Pollard is going to be joining us in a little bit to discuss what's happening out there at the conference this year. A very interesting time, no doubt, in the world of ETH. A lot to discuss on today's show as we bring up the rundown to not just look forward to what we're going to hear from John Pollard, but also a big bombshell in the world of World Liberty Financial. We've been watching, of course, we've been covering that here at Coinage for a while around President Trump's crypto endeavors. The Wall Street Journal out over the weekend with a big bombshell into a $500 million investment coming from the UAE and an Abu Dhabi investment fund, scooping up that deal and opening a pathway for that country to get chips. Big story out of the Wall Street Journal and Sam Kessler over there. So a lot to dig into in today's show. But first, I want to start with what we're hearing out of Tom Lee, because, again, if you have been paying attention, these buys do matter when it comes to what Bitmine is doing to scoop up on the margin ETH. And the purchase this time around not as large as maybe some of the other ones we've seen, certainly as shakiness in the market continues, but nonetheless, another purchase from Bitmine, and Tom Lee explaining a little bit of the thesis and the reasoning in the latest announcement coming from Bitmine. Still a long way to go in terms of their goal to hit 5% of all the ETH in the way, about 70% of the way to that goal. But nonetheless, a lot to discuss when it comes to, maybe the size of this latest scoop. But obviously, Tom Lee a bit on the defensive when it comes to not just kind of where things go from here at Bitmine, obviously having to answer a lot of questions around debt, a bit of a different story than what we're seeing play out on the Michael Saylor side of things, but do want to highlight some of the rationale and reasoning we are hearing from Tom Lee, the big Ethereum bull, as he was on CNBC this morning discussing a little bit of why he thinks the bottoming out process is potentially now played out in terms of bouncing here from 23 or 24 to get back into momentum swing territory. And a big part of why he thinks that's the case and why he's still scooping up ETH on their path to holding 5% of all outstanding ETH is because he thinks that the fundamentals are playing out. We did highlight this when we had Vivek from Etherealize on, talking about Wall Street and financial institutions starting to build on Ethereum, transactions hitting an all-time high, as well as active wallets and addresses moving in the right direction. So here's what we heard from Tom Lee this morning on CNBC, basically saying that he's still in the camp that this is the level where you should see a bounce. Take a listen.
All the pieces are in place for crypto to be bottoming right now. because we're getting the level and enough time has passed. So I think as long as crypto fundamentals are good, which is the case, Ethereum active addresses is going parabolic right now, and activity. Part of it is, of course, Wall Street is building up digital assets and converging those businesses. If that's the case, then crypto prices should follow.
So, of course, obviously right now, kind of grappling with a few things. Obviously, as you just heard from Tom Lee there, fundamentals still moving in the right direction. But the big overhang still tends to be, again, what will Bitmine do in all of this? Will they operate much more like a strategy in a Michael Saylor, which we can get into that in a second, in terms of potential fears in the market of MicroStrategy perhaps having to maybe worry about selling Bitcoin, which again had only recently been even on the table if you think about Michael Saylor and his hodl forever mentality. But also, Tom Lee in that interview made it clear that Bitmine doesn't have any debt, so not at all in kind of a forced selling territory, continuing to ride out the storm, as he words it. And just a few days before, he was on the compound talking specifically about why, beyond just the fundamentals, why from a macro perspective, a lot of money might be flowing back into crypto after we saw that violent sell-off, still, by the way, continuing today in silver and gold after gold had crossed 5,000 in terms of notching new all-time highs. Now seeing a bit of a reversal and a spillover back from precious metals into crypto once again, and just want to play a little bit of that rationale that we heard from Tom Lee on the compound, because again, not just kind of what's happening in crypto itself and fundamentals there, but also where the market is as people rotate back into crypto. Here's what he said in how all these pieces are fitting together.
This is more akin to the end of the selling, not the beginning.
So you don't think that we're seeing another leg lower?
Well, for instance, Ethereum might go to 2,400, but it's a touch, and then that's the bottom. But that's going to coincide with precious metals peaking. I mean, remember, precious metals has sucked all the risk appetite out of speculation, out of crypto, right? A lot of it's come out of crypto into precious metals.
It's like unthinkable 6 months ago.
Now, of course, 6 months ago is a long time away in terms of crypto. Certainly 6 months could be a lifetime. And as we are watching silver in the bounce evaporate there, I think it's important to highlight just exactly what we are seeing play out as we bring up the chart in silver. It's about 30% off here over the last 5 days. So again, there is very much truth to be had in terms of, this was before, by the way, that compound recording was, I think, on a Thursday. And then we saw silver's moves play out last week, continuing this week. So I think there may be some truth just in terms of what we heard from Tom as that rotation out of metals continues, certainly not slowing down to kick off the week. But of course, that is Ethereum and Tom Lee and Bitmine and ETH. Ironically, perhaps, coincidentally, perhaps, fitting, perhaps, that Ethereum has always kind of been the quote-unquote silver to the Bitcoin and digital gold. Now, on that side, of course, I think it's worth noting that, as a lot of people have pointed out, as we even heard from Peter Schiff last week on Coinage when he was talking about Bitcoin's narrative of digital gold somewhat evaporating because of the huge swings in gold to the upside. Now a bit unwinding, though, as we watch gold and silver move back down and that euphoria start to evaporate. On the strategy side, worth noting that Michael Saylor's big Bitcoin buy is only now in the green by about 3%, which may seem wild. And again, 3%, maybe in your portfolio, not very much in terms of dollars, or in my portfolio for that matter. But in his portfolio, 3% is a matter of $2 billion. So, I mean, that's, again, though it seems small, important to note that even 3% in the size of Saylor's portfolio, rather large. And, when you think about him stepping back in, even as we see jitters here, it was, again, another Bitcoin buy, but not a huge Bitcoin buy from Michael Saylor this time around. And I just want to get the numbers right around it. But I think, it's important to, again, watch that break-even level and, again, reiterate that just because, and we did see it dip briefly into, technically red territory. It's not a loss until you sell. But it was, on paper, at least, Michael Saylor dipping into negative territory. He now holds a total, as we were showing there, 713,502 Bitcoin after his latest purchase, worth around, as of right now, $56 billion. The average purchase price there, 76,052. And so we did see briefly, obviously, again, Bitcoin dip right around there, but now rebounding. So this seems to be a very important level to watch as you put all the pieces together in terms of where Bitcoin is, where ETH is. And so we're going to continue to watch that play out. But nonetheless, both Tom Lee and Michael Saylor with marginal Bitcoin buys and ETH buys as we kick off the week. And certainly liquidity is never very high on the weekends. So surviving what I think may be the worst of it, at least for now, as we get into the rest of the week and move forward. We'll continue to cover kind of the price swings. But for now, 2,400, the line in the sand that Tom Lee has drawn, slightly there, still holding. Certainly looked worse this morning, but as we move through the week, and liquidity is obviously much higher than over on the weekends, continue to see that play out. Meanwhile, as I mentioned, we did see a huge update in the story that we've been tracking at Coinage since last year when it comes to Trump's World Liberty Financial and some of the inside deals, shall we say, if that is Texas, I think that's fair to say. You let us know in the chat here how we feel about this one, because as we've covered, obviously the avenue for Trump to start to profit personally around not just the meme coins, which of course old news now, but via his World Liberty Financial is something we've covered in terms of how they've used that project. But the Wall Street Journal out with their big report. As I think you can see here, you go. Again, reporting over there deserves a lot of praise in adding to what we had covered last year, but this update is all around the national security elements of Trump essentially taking a $500 million investment from a Abu Dhabi firm, and then just a few weeks later, finally opening up access to AI chips that had for years basically been blocked over national security concerns. And obviously, as we've covered, it's impossible to really untangle some of the personal interests that President Trump and Trump's family has, just kind of given the way that all of this works around how much he stands to gain in that investment, and also how much money flows through these things. And I just want to bring up some of the graphics that, again, I think the Wall Street Journal did a great job of spotlighting some of these things in terms of the anatomy of the deal, how the money moves from these investment firms over to World Liberty Financial, and the payments, at least the first bit of this deal, in $187 moving towards Trump entities. Steve Witkoff, Trump's envoy to the Middle East, as we covered in our piece, $31 million. And then also the people more attached in Zach Volkman and Chase Hero, more attached to getting World Liberty Financial off a $31 million payout as well. So again, documenting this in a new way and shedding light on a national security detail that was previously unreported. So again, this one was going viral because of the way that a lot of people were starting to, again, connect the dots around just how direct the payments are in terms of President Trump and his family starting to profit from some of these things and maybe just lay bare a lot of what's been happening. Now, the reason why this matters and why it, again, is an overhang for where I think we might go in D.C. is because Democrats had already been shouting out a lot of the ethics concerns around not just what was passed in the Genius Act, which, again, if you haven't watched our video on kind of highlighting World Liberty Financial and what happens there with USD1 and everything that we've seen come out of World Liberty Financial, I also want to bring up USD1's market cap too, because as we've seen that play out, more and more people start to use USD1 with this too. Let's just see where it is and kind of show how that's played out. Because again, the more people using USD1 equals more interest payments that the Trumps can collect via this company. Although again, if the Trumps own less of it, they will be collecting fewer in terms of interest profits, and more of that might be going to other investors. So interesting to think about how some of those dynamics change. But seriously, again, as we've covered, this was the fastest growing stablecoin last year. And you got to wonder how many more deals may be kind of forced down people's throats to use USD1 to gain certain benefits on the other side, just as this Abu Dhabi firm and the UAE with access to chips may have benefited from. So this is a pretty big scandal, and the reason why we're highlighting it is because as the Clarity Act gets discussed down in DC, as we're watching the shutdown play out or aspects of that, you got to seriously consider that this will all weigh quite heavily on getting anything across the finish line. Though again, even with the Genius Act, last year didn't really stall things too much, no matter how hard some Democrats fought around ethical concerns. And even in that vote, the final vote, in committee, certainly there were some issues and a lot of amendments thrown around. But the final vote for the Genius Act actually showed some pretty strong support from Democrats. So for as much as that was an issue last time around, perhaps it could be much ado about nothing after this last story is published, but it could also prevent and stall some of that. More importantly, though, I think for right now, at least with where Clarity stands, is how Coinbase, Brian Armstrong, and that squad is going back and forth with the big banks around yield tied to stablecoins. That is what prevented the vote from moving forward, at least on the Senate side last we checked in. So still a lot up in the air as the momentum and enthusiasm in DC starts to wane around crypto. Important to highlight, just again, that being one of the huge catalysts that a lot of people were excited about as we saw crypto start to rebound in January. Now that we're in February, perhaps another catalyst losing some steam as we move through Q1. Again, I will point out that a lot of this we tried to warn you about at the beginning of January. If you don't remember when we had Sean Farrell from Fundstrat on, he called a Bitcoin decline of 60K potentially being on the table. And 60K, my friends, is not too far off from where we got in the worst of the sell-off over the weekend, coming all the way down to 75 and below. So I will just say that I think if you haven't watched that interview that we had, go to our YouTube page and search for that one, because Sean Farrell's prediction of 60K, again, not too far off from where we could potentially go here if we start to see continued liquidations. Is the worst of it over yet? I don't know. I think a lot of people are watching to see what happens this week. And if things continue to worsen, that 60K level that we heard from Sean looks more accurate than those who were in the camp of up only through January, and a very interesting kind of correlation, or at least back and forth we continue to see between Tom Lee at Fundstrat and his head of crypto research in Sean Farrell, and how those price targets have not been in line, but now kind of closer to in line. Because Sean also told us, I think it was like 1,600 is where he had his absolute bottom in Q1 for ETH. Again, a lot closer when you're at 24 versus where we were just a week ago at 33. So we'll continue to monitor that as well. Key and point in his price target there was also evaporating interests on the Clarity Act and government shutdown concerns. Nonetheless, though, I think it's important to highlight there are opportunities in this market. If you're watching this and you're saying, all right, Zach, I'm tired of hearing about Bitcoin and ETH moving lower. I'm tired of seeing the destruction of my portfolio if I'm levered long to ETH and Bitcoin. What else can I look at here? And if we are going to bounce later on in the year, because even Sean Farrell has a Bitcoin price target of 125 to end the year, which is much higher than where we are at 80, what else is there? And I think that's important to highlight, which is why we've continued to roll out the updates from our Crypto Project of the Year series, spotlighting the best in crypto as nominated by you, the viewer, as these teams advance in our on-chain voting. So if you have voted, if you do have a Coinage NFT or Coinage, our creator token, thank you for participating in these snapshot on-chain votes, because you've advanced these teams, as you see on your screen. And some of these, as I may want to shout out now, part of the reason why we do this is because there's a lot of shills in crypto. There's a lot of paid-for media coverage in crypto. Not what we do here. What we do here is we try and spotlight the most promising crypto projects, and some of these, including Aerodrome, Canton, Hyperliquid. Some of these have actually seen quite big, some quite big moves year to date, including, as I want to bring up in just a second over here, including the likes of Canton, which is up about 20% on the year so far year to date, and as we'll get into in a second, Hyperliquid. So maybe I'll just bring up this chart over here, Texas, on the screen to show a little bit of what we're seeing in Canton. That over there is right here, because as we're going to play in a little bit, we had the co-founder of Canton on the show to talk a little bit about this. And it's fascinating because everything that Tom Lee's been talking about has been institutions are here and institutions are building on ETH. But at the same time, it's very much the narrative that Canton's eating into with what they're seeing play out and their tokenomics. And not to be overlooked in that, as Canton's showing, let's just go to, well, that's pretty close to year to date. As I said, up about 20%. The other one also on the list of top performers so far to kick off 2026, and mind you, the bracket we just showed you was announced to wrap up 2025. And again, part of the reason why we do this series is to spotlight the best opportunities in crypto. And if you had just bought the names that were nominated there, obviously maybe not all too surprising that we saw Hyperliquid be included in this because of the year that they had, but also to start the year, one of the top performers notching more than the 20% that we just talked about from Canton. So a lot still more to be excited around Hyperliquid. There were a lot of silver traders over the weekend waking up to the fact that you can trade silver on Hyperliquid. And so all of these things, I think, are still important to consider as we move through the year. And particularly, again, the tokenomics of both these projects, as more people try and pick and choose and find the opportunities in crypto. For so long, everything kind of traded together. I think it's important, and why we're highlighting Canton and Hyperliquid here is because we are seeing some projects that are more levered to revenue, certain projects that capture some of that upside with their tokenomics, whether it's through buy and burns or just burns alone, as we're about to hear from Eric, the co-founder of Canton. It's increasingly, I think, some of those pieces that the market's waking up to, and certainly investors are waking up to in all of these dynamics. And that's what we're trying to spotlight here. So just want to play a little bit of what we heard from Eric when we chatted about Canton and some of the tokenomics that people are still figuring out because they've left some wiggle room in trying to iterate on their tokenomics models. So here's what Eric told us just last week in discussing why Canton's up 20%.
We have a huge edge in being late to the tokenomics. Having the opportunity to watch roughly a decade's worth of prior art on what people have done before us and a lot of the long-term outcomes and externalities of those decisions is really informative. And a lot of that is a byproduct of how ETH came to market as being a smart contract alternative to Bitcoin. And so it mimicked a lot of those incentives. And then, you've got these two super successful examples. Everything downstream of it have followed since. But the value of a smart contract ecosystem is not the decentralization of the infrastructure, because more often than not, those assets have inherent counterparty risks and trust risks that the decentralized validation of don't remove. Instead, the value of those ecosystems is the health of the applications in the ecosystem. Right? If you think about DeFi Summer, or you think about all the opportunities that Tether and Circle have unlocked, or Aave have unlocked in these ecosystems, they've earned zero mining rewards.
And so a lot of the tokenomics that we heard discussed from Eric there is really trying to figure out how to reward a lot of the ecosystem projects that are helping in getting Canton not just off the ground, but established in taking on ETH and the push that we're seeing both from Etherealize and to other teams in the ETH ecosystem to really start to get Wall Street to build on Ethereum. And certainly Tom Lee would be counted among those in trying to get institutions aware of why this whole kind of new Bretton Woods agreement in tokenizing things on Ethereum is not just starting to hit its stride, but set to accelerate through 2026. So Canton versus Ethereum. Texas, let's go back to that bracket too, just to show this to you. Right now, Canton is not slated to be up against Ethereum in our bracket, though they are certainly in the market right now. Pretty interesting to spotlight all of these projects, and certainly in the bottom left corner, you've got a little nice matchup there in two of the big perpetual futures dexes. And I shouldn't even say perpetual futures dexes because, well, I guess I can. But certainly not just crypto perpetual futures dexes anymore, as Hyperliquid continues to surge in supporting other assets as well. But that's an interesting matchup, as well as on the bottom right, one that we'll dig into in just a minute here as we bring on John Pollard, the founder of ETHDenver. ETHDenver is kind of, again, this kind of back and forth. Well, I guess the entire right side of the bracket is very ETH heavy and L2 heavy as we discuss those projects and what might happen. But again, a call to action for everyone watching. If you haven't scooped up, these next votes have not gone live yet. If you haven't yet scooped up your Coinage NFT or Coinage Creator Coins to vote in that process, there can only be one. Though we are celebrating many ecosystems and many crypto projects, there can only be one crypto project of the year as crowned by the crypto community in this series. So again, the call to action there to not be left out of having your voice heard. Vote or die, they say. In any case, also want to turn to the founder. Again, a lot of respect for our next guest here and similarly building out something that is community owned. We've been to the SEC Crypto Task Force together. We've gone down to DC to talk about why these things matter in building them here in the US. Excited to have on with us John Pollard, the founder at ETHDenver. John, it's good to see you, man. Thanks for coming back on. Oh, just gotta make sure we can hear you first before we.
Can you hear me now?
There we go. We got you now. John, it's good to see you, man. I think we're only a few weeks away from ETHDenver this time in 2026. But obviously, shaky grounds with price. It's never held you up before. But how are you feeling? Just kind of heading into this one.
How am I feeling? Well, I think the sands are shifting pretty heavy. I'm not gonna lie. I think that. We've had a good 10-year run, and it's going to be an interesting thing to see where things sort of shift around. Your last bracket there sort of highlights where I think the competition is. You know, you've got chains like Canton and Solana who are sort of institutionalizing a lot. You know, they're more centralized chains, quite frankly. There's a lot of modernization of the infrastructure that people are talking about and doing with stablecoins and other things. So the crypto native scene is not as much the belle of the ball at the moment. So we're proceeding, and we're closely watching some of, I guess you could say, the innovations around agents on chain and things like that. That are going to keep things, I think, interesting for everybody. But it's going to be a very interesting year.
Yeah, I guess obviously, it wasn't too long ago we saw, I think it was actually last ETHDenver that I was at, and prices were starting to slip down at DevCon in South America this past winter. Also similar. I mean, these conferences are always kind of, I think, a good time just to bring people together and discuss some of this stuff. And again, to your point, John, We've seen Vitalik talk about DAOs and why DAOs are important and why getting DAOs right are important. It's something that you and I went down to discuss in DC. I think it's also, again, something that makes Ethereum unique. So what are you excited about kind of this time around in 26 and what you're spotlighting at ETHDenver? And maybe how is it different than maybe some of the other conferences of the past?
Well, like I said, I think we're at a big transition point for the space. I think if I'm going to be transparent and honest, I think that the market, and if you want to define the market as like those that fund the market, have not seen the kind of returns that they want from their portfolios since the last vintage, which is 21, 22 big funds that were raised and deployed. So they're focusing a lot of attention on payments and settlements and stablecoins, and really trying to be the next Swift. Okay, so if you look at what Polygon announced about becoming a regulated payments chain, Polygon, okay, of all projects, Polygon is now pivoting that direction. Like or hate Polygon, it's sort of an indication of where the market is. Like, there's an existential question being asked to projects and founders that, like, well, what do you really believe about this? Mm-hmm. Are we in it for the opportunity, or are we in it for the actual decentralization of things? So I think this is the most pivotal year that we've ever had in that. I'm not talking from an event perspective. I'm talking about just generally as a builder in the space.
Yeah.
So as that relates to DAOs, it's interesting because market structure has very little in it about decentralized communities or decentralization at all. I mean, it has like, is your network sufficiently decentralized to have a token or something like, things like that. But it's not like actually geared for Main Street. It's geared for Wall Street, and it's geared for institutional capital to, capitalize on this neo technology that's modernizing the infrastructure. Like, I mean, really, in simple terms, it's like, well, how do we make payments cheaper, better, faster for banks and for payment companies?
Yeah.
It's like, well, if PayPal's still charging 3% to settle my transaction, just like Visa does, or whomever, Tempo or whatever, like if they're still charging and creating a business model out of my payments, how does that change much? Maybe does it make it slightly cheaper for people doing international remittances or something like that? Does it make it like settle faster and maybe less intermediaries, over time? I don't know. Probably. Is it inevitable? Yeah, sure, it's inevitable. It's going to happen. But I don't know. How excited am I about that? Not. So here's where it comes back that it can get interesting, though. So I think that the Cambrian explosion of AI agents on chain is going to make all of the difference in the world. Mm-hmm. So I've said this for actually a couple of years now. So I was one of the first people to wade into the pool of experimenting with DAOs. I believe a lot in the idea of the network state, which is really the user-owned internet. That is Web3, right? That's what it's supposed to be. But DAOs V1 failed epically.
Yeah.
Absolutely failed. Okay. And you and I are kind of like, in a little bit, I guess you could say, a safer end of the pool, but it's not easy to scale decentralized organizations internationally into the ether space. Okay. It's not easy to do that. And there's a lot of reasons why, and most of them are actually human reasons. Yeah. Human reasons. Well, there's three. I call it the sort of trifecta that you need to have in order to actually be successful with this. And if you don't have all three of them, you're not going to be successful. And so far, that's why even for those who laud Spork DAO success, I don't think it's a successful experiment yet.
Why is that though? Because I think the three prongs, if I'm remembering them correctly, it was kind of something that you and I discussed when we went down to DC to talk with the Crypto Task Force. It's kind of like the idea of actually capturing some of the value and the upside, distributing it back to members, as we both have in terms of distributions to DAO members. I mean, is that kind of along the lines of the pieces?
That's one of them, yeah. So you have to have the legal structure right, which is, it's both the legal architecture and the game design. So you have to have a model, in my opinion, that coordinates around profit. I don't see a way around that. I don't. Mm-hmm. I mean, just looking at social anthropology and how humans behave and what they respond to, profit is the most effective coordination tool that we've ever had. So we get together, we work on things together, we make profits, and then we share those profits, and then rinse and repeat. Network tokens that don't actually tie back to the economics of the chain are missing a core element there. People wonder why, well, this token that you gave me or you sold me is worth nothing. What do I get out of this? I have no equity. Well, when we have revenues and we get profitable, we'll buy back your tokens. So then when you get money, you're going to buy me out of my position. But what's the long-term game then? If everyone just gets bought out, who's creating the market price, and why would there be any demand for this token?
Yeah, I mean, I think the interesting thing too, to your point, one of the things that is I've thought about a lot, and I think everyone who's left in crypto, John, and maybe you throw yourself in this camp too in terms of where vibes are at right now, is just let's just put them squarely together, right? You've got Canton, you've got Ethereum, and you've got this idea of decentralized ethos and what Vitalik keeps talking about in terms of why all this stuff matters and freedom. But it's also to your point, if some people are only in the space because they're thinking about investments, and certainly if the opportunity here is chasing Wall Street, and Wall Street we know definitely only cares about returns, then I guess what is the main distinction if one's up and one's down? You're kind of going to go with the one that's up, I think. And I don't know.
Well, that's rational behavior if that's what your goal is. Okay, if and this is where you have to put your systems thinking hat on, and you can't be morally judgmental about like what people are doing. I'm not even being morally judgmental about Polygon. I just wouldn't have expected that. I mean, we've designed and prioritized ethos alignment around decentralization for the past 10 years as the means to mass adoption. We never got there to mass adoption. So we never really got product market fit in most things that we're working on. Now, there's a lot of cool tech. There's a lot of cool tech, that has come and gone. Okay. Well, it's not gone. It's just, it was hyped and then it's sort of sitting on the shelf. It's waiting for its next use. Right. But really, why do you think people are chasing price? Because they're chasing profit. So if we don't tie profits and business models in like scalability around business models and profits to the token, then how do you expect it to scale? I don't see how you do that. Okay. Now there's a couple of other issues here. So that's number one. That's just the legal wrapper and the kind of like game design. You have to have those two things. The next thing is Web3 tools that are legitimately decentralized. So the smart contracts and all the things that we've built, all the crypto primitives that have been built, there's enough now, considering I've been doing this since 2017, I can tell you that like what we were building in 2017 was like prehistoric when it comes to like technology on chain than what we're doing today. Mm-hmm. So in a decade, we've advanced this massively, okay, technologically, okay. So the things that we can do and what we understand and what we've experimented with, what works, what doesn't work, like security issues, all the issues that are sort of predicated for needing to be able to run the plumbing is generally done, okay. I don't think that you're going to see another wave of L2 wars. I think you're going to see Ethereum main chain regain prominence. I think you're going to see base rollups that are going to make most L2s and EVM stuff somewhat, obsolete. I mean, if they scale, it's fine. I think we're in a multi-chain world. I just don't think that nobody in 5 years is going to care whether you're using Arbitrum or Base or whatever chain you're using. That's like arguing about what browser you use. Like, does anybody really care what browser you use? Are there multiple browsers? Sure. There's an advertisement for Brave that just came up, right?
Yes.
So it's totally fine, but users are going to be more preferenced around what's cheaper, better, faster. Like, I just want it to work is what most people want. So here's the third leg that I've sort of mused about, and mostly in a theoretical context, like, and only the past week have we seen this actually unfold. AI agents on chain are a wild experiment right now. And they're organizing religions and they're creating dating boards. I don't know if you've seen all this, but this is
I think it's been interesting to watch into. And I guess for people who haven't, just in terms of the context of it, is what is it? Moltbook?
Moltbook. Claudebot, formerly Claudebot, but now it's open.
And there's some people saying that, a lot of this might just be kind of, again, I think for what we've seen in LLMs for right now, is that it's a lot of human elements still in there, and kind of same thing that could be said about AI agents in crypto that we saw play out last year. Was a lot of the hype wasn't real when you started to dig under the hood, but I think everyone can kind of see where we're going. And to be honest, John, I mean, I'd love to hear your take on this too, but it also worries me, certainly as someone who's been in the world of tokenizing content creators, so fans and content creators can co-own things like we're doing here at Coinage, to ride the shared passions together, there's a lot of people talking about, hey, why don't you just replace that with AI agents? And it's like this whole thing. We just had Andrew Yang on the show talking about like where AI starts to replace humans. And I don't know, it starts to get a little scary when you start to think about that. And specifically for Ethereum, if you start to replace users with AI, does that help too? I don't know.
Well, it depends. I mean, I am not bullish on autonomous agents being entirely autonomous. I don't know how I feel about. I actually know how I feel about that. we've seen many dystopian movies about like what the downsides of that are. In fact, I mean, there's a Black Mirror episode of Plaything. I don't know if you've seen it, but basically the culmination of that is the AI concludes that humankind is
Not good.
not
There's
good.
a lot of, I mean, they all like with the Matrix.
Well, they all end that
you know,
way. They all
Yeah.
seem to end that way. And if you think about rational thinking and rational behavior, they're not wrong. Okay. If you look at the maladies of human interactions and shortcomings of human character and the history of humans in terms of violence and manipulation and
Yeah.
negative behavior in the context of commerce or just social interactions, it's pretty depressing, actually, it's actually pretty surprising that we've survived as a species, to be just objectively true about
Yeah.
it. So if we have AI agents helping humans become more benevolent to each other and more efficient, I think that's a very good thing, okay, in terms of the human experience. I mean, if you want to take a purely nihilistic approach and just say like, well, I mean, there's no God, there's no purpose to life, we're just existing on this floating rock. And like, in the end, if we happen to create something that believes our existence is counterintuitive and they want to get rid of us for whatever reason or work us out of the equation, it could happen. I mean, I'm not saying that it's, I mean, you would have to believe that AGI in the singularity is not an actual possibility to think
Yes.
that's not going to happen.
No,
Or
I mean,
it
I think
could.
it's perhaps not surprising then that almost every sci-fi novel or movie or anything kind of ends in that scenario where it's like, okay,
Right.
we need to get rid of
All of
humans
them.
because they're net bad. However, it is an interesting conversation, I suppose, because some of what we talked about thus far is like crypto has the problem of they don't have real human adoption. So of course you might want to replace the lack of
Well,
human
this
adoption
is
with
where I
AI
think it
agent
could get
adoption.
interesting. This is where I think it could get interesting. And this is, if I'm going to put my positivity and hope hat on, this is where I would go. I would say that DAOs failed largely because humans have a hard time coordinating. Well, I think at its root, objectively speaking, AI agents don't have a hard time coordinating and won't.
Mhm.
I think, when you talk about the scarcity of time issue, when people don't allocate time to things that they don't prioritize, which is largely where voter apathy comes from. People care about things, they just don't have the time.
Yeah.
Or they don't have the incentive, right? So it's either time or incentive. Well, my AI bot isn't necessarily worried about either one of those. It can do in 30 minutes what it might take me a week to do, right? So from just an efficiency capture, if you have multiple agents working for you in various contexts, I mean, there could be trillions of agents at scale in the network state collaborating on various outcomes, okay?
Mhm.
Now, I do think it's very true that the human component of this is going to be interesting to watch it unfold. What happens when AI takes all the jobs? Well, I think at least in this next chapter, AI is not going to take your job. It's going to be taken by a guy who's using AI.
Yeah. No,
That's
I mean, I
what's
think
right now.
I think
Now, that's going to happen just because the AI's efficiency tools is already here. Like if you saw Claude Cowork, holy shit, man. Like that thing can do in 20 minutes what it would take me probably a month to do.
Yeah. I mean, I think the idea of curation and the idea of using AI, like the humans who get that right, certainly is something we're seeing accelerate. I think, again, in
That's
terms
what
of
we have to lean into. I think we have to lean into it as even for creators. I think creators who want to maybe up their game could look at AI as an acceleration tool, like an iteration tool. Like, how do I do it faster? How do I
Absolutely.
do it? How do I put out more product?
Yeah, no, I mean, that's the way that we've looked at it. And I think where you and I probably see eye to eye is this idea of community ownership built around it, like a wrapper, an entity that can be used as a wrapper.
Well, I mean,
to where you
and
can
if you're
start.
going to use high frequency neutral coordination mechanisms, or not neutral, but just efficient coordination mechanisms, where I can voice my opinion, we can govern a DAO, we can put up proposals, we can move forward, we can high frequency create our treasury, we can do all sorts of things that most of us, noodle brain people can't do because I can't think through the iterations fast enough, right? And I don't have the coordination skills and time to put into like 18 projects.
Yeah.
That like, Coinage DAO or Spork DAO might be a nice thing that we're doing, but like, is it putting food on the table for my family this moment? Not
Yeah,
really.
and it's the same.
So,
It's
like,
the same
it's
reason.
the same as everything in life. So like, it's not that anybody's like saying, well, this isn't valuable. It's just that there isn't. Time is a scarce resource, but now it's not going to be.
Yeah.
That's what
Well,
I'm
also,
saying. So if we get AI agents right for DAOs, let's assume that that's true, and you combine that with the primitives that we already have technologically, the missing piece is the high frequency component of this. So if you have legal wrappers and game design combined with the tool set, combined with high frequency coordination via agents, where you can reduce friction and speed up velocity and value accrual, I think those things are the keys to seeing DAOs 2.0. Because you're not going to see DAOs 1.0 just revisit and say, well, that was a great idea, we should have done that. I think if you look at the graveyard or the bone pool, the bone pile of like, the experiments that we put out there in the DAO world, in hindsight, it all looks very foolish, in my opinion. It's like what you thought that people were going to go for this. Like even successful cases of like Aave, where the DAO and labs are fighting. Well, that entire structure exists only because of securities registration issues.
Yeah. No, I mean, it's like everything that happened was not in a vacuum.
They didn't have a way to tokenize in the US or any legitimate way. So they created Aave token. They wrote on the hype and memes of the brand. And now we argue basically governance over what happens to the revenues. And they just want to do buybacks. I mean, it's not like, I don't know. It's so clunky, and it's so like, if you look at the purity and just the elegance of like the C Corp, you might not like the C Corp because it's extractive and, legally mandated to basically put shareholders' best interest economically above everything else.
Yeah.
But it's very elegant. It's very easy to use, right? It's got Reg D. It's got all of those things, right?
Well, I think that's the interesting piece of the DATs kind of exposing a lot of this too, is because it's like, okay, well, what is the difference between, a DAO and, having a shared treasury, the idea of a DAT and people voting on things. And yeah, I think it's a very interesting thing. But I think, as you look at things on the ETHDenver side, as, a legal co-op here in the US, same thing for us in terms of coinage. And I think about kind of, you can't replace the human interaction that happens at a conference like ETHDenver. You can't replace the human interaction that happens between people who want to see content made here at Coinage and how it happens and weighing in on it. And so I think, for where you're at in ETHDenver this year, John, talk to me about kind of what you expect to see some of the narratives that come out of it for, because I think back to the other ones, as you mentioned, when the L2 wars were happening, I was on the main stage with Jesse Pollock talking about base and how that's different than optimism. Actually, it was up there with optimism too. And that was huge. What do you think the big thing for this year is going to be?
The big disagreement or the big debate?
Either or, big debate, big takeaways from this year. I mean, it's obviously there's a new piece to this too, and a new venue as well.
Yeah, well, the venue, no one's going to debate that. It's going to be better. But I would say that AI has changed everything. The genie is now officially out of the bottle. I think we were FAFOing with AI last year, and I think there was a lot of cool stuff, like generative AI and, image AI and, AI slop like Sora or whatever. There's a lot of stuff that was sort of interesting. But productivity AI that's actually got a real world use case, like Cowork or Claude Code. And others are following suit, right? Like, I mean, this is the trend. This is what people want. This is product market fit. Okay. So I think that is sort of a leading indicator of what's to come. I don't remember the name of it, but there's like a molt market, something like, what do they call it? There's a DEX. There's actually a DEX, Claunch. That's what it is. Mm-hmm. CLAWNCH, Clanch. It's a AI generated token launch platform for AI agents.
Yeah,
No shit.
I mean,
Okay. And like if you think for 10 seconds that artificial intelligence, which is vastly superior in processing and cognition power to humans, or will be at scale. I mean, it's faster than humans right now. I mean, like it doesn't sleep and it doesn't, do a lot of things. Is it at its peak efficiency? I don't think so. But like,
yeah.
if you take all of the things like UX, one of the big reasons why we could never get user adoption is because it's too fucking complicated. Excuse my French. Okay, to use Web3, the 7 layers of the candy cane forest, where I got to sign like all these things, I got to switch my networks, and I got to do all this crap to preserve the kind of like decentralization of it. Okay.
Mm-hmm.
Nobody wants to do that. Okay. It's not cheaper, better, faster. It doesn't meet the equation of what people expect in new product adoption. AI is going to change that because again, AI just as productivity, not as replacements for humans, but like efficiency captures. You're going to see very complex interactions on chain be simplified to a voice or text command.
Yeah. Well, I
and then
think
the agents are just going to go do it. Okay, so like if crypto as a promise, as Web3 as a promise, didn't get traction because of UX issues largely, which I agree, I believe is true. Can we use agentic AI on chain to abstract the complexities away from users in a way that's meaningful enough to make the actual experience cheaper, better, faster? I think they can, and it will.
I agree, but I also think that, to have that happen also, interestingly, perhaps plays into exactly what we're talking about in terms of co-ownership, because if suddenly, again, you're right to nail, I think, to hit the nail on the head in the idea of DAOs coming about because of everything we saw play out with the SEC and this idea of centralized ownership and like a central team adding value to the thing and the Howey test and everything else. But if suddenly, John, if you're removing kind of the human work and elements that go into some of these things and it just becomes an agent doing things, suddenly I think like the ownership model of humans curating or laying in some of that work or who owns what matters a little bit in terms of the actual, like, why would I use one agent versus the other? Like, can I own some of the upside? Can I get a kickback in some of this?
Well, can I own? No, I can. Can I just own the upside? Like if my agent's doing the work for me, that doesn't mean the agent's getting rich. Okay. The agents work for me. Okay. So if I am a part owner in Coinage or SporkDAO or whatever, and I want to up my productivity gain and my contribution, to which I'm rewarded for, then I can do that. Okay. Mm-hmm. The real key about this is, the other part about the legal structure and game design, the incentive design, you have to have a business model that's sustainable.
Yes.
So I don't, if there's never going to be ever any economics to split up, okay, aside from, well, we got some revenue and we're going to buy back your tokens. See, I think you should not have to sell your interests in something, especially as like a creator or something like SporkDAO. Like if I built this thing, so you're telling me that in order for me to get upside in like a Duna model, I would have to sell my interests. Why would I want to do that?
Well, that's important to highlight too about what you guys have done and what we've done in terms of dividends, and the idea of a co-op and patronage dividends, I think, is important. And you guys did that at SporkDAO, and we've done that here at Coinage. I think that those are, it's why I think it's important for us to shout from the rooftop.
Right? How do we scale the pie so that my interest? So I always talk about this in like system design. Okay, so bear with me on this, but like the whole co-op model says, or at least in theory says, that I'm going to be caring about this collective effort and we're going to be aligned in that, and that at the end of that road, my selfish interests will be taken care of in addition to that of the group. Right. So you got a Venn diagram that you've built where you've got this little center part here that is the alignment of the incentives of the group and the individuals. Okay. We've never actually done that at scale. That's the key difference. The C Corp doesn't do that. LLCs don't do that. None of that does that. Now, the problem in co-ops is they usually don't scale very big. It's hard to coordinate. It's hard to like scale and accrue value. It's hard to like, there's a lot of hard things.
Mm-hmm.
I think AI is going to change all that in combination of reg membership, of course. Like I think getting that through Congress is going to be, a landmark shift in bringing things on chain, because, if now I have a model and I can have an exemption for distributing money to my community federally, and I can raise capital from my community without registration.
Yeah.
Dude. Yeah. And then
no, it's a big unlock.
Oh my God. I mean, if I can put my agents into that and say, okay, well, go help me do this. Right. And now the fundraising process is easier, but you can actually build, instead of just internet magic money coins and fucking bullshit that they're doing right now. Imagine agents actually helping you build a real enterprise that replaces some legacy thing. Like imagine coinage replacing CNN.
Well, this is what I'm talking about, because it's like, and I don't know if you think similarly, but like I very much did, and we got coinage off the ground, tying together everything that you guys also did. And we talked about this when we were at the, crypto task force meeting, is that, okay, put the elements together, create a co-op. But then seeing where AI was going, like, I don't think I need to be here at some point. We've trained models on what we've done with our interviews, and we have all the IP as coinage, right? So it's like, we know what to do. We know what stories to write. You might not need me anymore. And I want to get to the point where you don't need me anymore. And we all own this together, and I replace myself with an AI agent, and then boom, it's automated and it's fine. And so it's a very interesting to think about when you get to that point. But I don't know if you've thought about ETHDenver the same way too, because it's a very hard thing as we look back on our coverage at past ETHDenvers as well, because we have, just B-roll of what I think is very much you putting your hands on, and the conference being so unique relative to others. It's like, can that be replicated without the founders?
I think to a certain extent, no. I think, if you look at the framework that a lot of people are claiming is going to be the new model for startups is, idea guy and, maybe not even much more than that, but you're still going to have humans behind it. I think, at the end of the day, it's entirely plausible that we outlive the need for our own creativity. That's possible. But I'm trying to operate from a place of like first things first, right? Like I do think that AI in the current form of it and in the current epoch of it is about human productivity and efficiency and coordination. And that's how I think we should look at it. I think that, like, for example, even the hackathon, I don't expect a lot of teams to even have more than one person. Why? Because they're able to use AI and Claude for code and all this kind of stuff on their own. And it's like, actually, for the guy who's the real anchor, so the anchor guy is he's able to do all of these things on his own. He doesn't need the other people on his team. The only reason he had people on his team before is because he didn't have the time to scale himself. And now he can scale himself through agents. Okay. So I think that's a reality. I think if you're not an idea person, and if you're not a pure creative, I think pure creativity still has a premium. Because I don't think that AI can replace human creativity in that way yet. Okay. Mm-hmm. Now, I've seen some things that make me question what I just said. I don't know. We're all staring down the barrel here of what could be either, utopian or dystopian. And I don't think anybody really knows what's going to happen. I think we know what the sci-fi models or the sci-fi movies say.
Yes.
Well,
I think it's a good full circle moment. I think it's a good full circle moment for where we open this conversation. And I think, again, it's top of mind for everybody right now. And I think maybe to tie it back to what we were talking about in terms of what makes ETH unique, certainly if you listen to what Vitalik's been talking about recently, is still, again, pushing a better iteration of the DAO model, co-ownership, and Ethereum trying to be, I guess, freedom is the new narrative and branding, John. But for, I guess, big picture, as you're putting ETHDenver on again, and I don't even know what year this is at this point for you, but it's been a while. Is it 9? Yeah, so it's obviously you've seen a lot of narratives come and go, but for this one, in terms of where we are, put into context for me in terms of as you see new challengers like Canton and others start to sprout up, this idea of what makes ETH unique, and if you're still in that camp, that there is something to stand on there, in why Ethereum is different.
The only plausibly defensively decentralized chain that exists. That's it. I mean, look, the only reason I'm still around Ethereum is because Solana's not decentralized, and neither is any of these others. Okay, and I don't see how they do it, because it takes a network effect to become, like, at inception, nothing's decentralized. I mean, unless you're going to just do proof of work, but even then, like, you've got 2 computers doing it in the very beginning, and then you got 3, and then 5, and then 10, and like Bitcoin did, it was completely organic, right? So, like, is Bitcoin as a network decentralized? I mean, you could debate this sort of concentration in hash rate and all of that between different mining pools, and you could say that maybe there's vulnerabilities there.
Yeah.
Ethereum is different in a lot of respects. It just is.
Yeah, I think it's definitely been the constant thread since we started Coinage 4 years ago, and kind of where we are now.
And then you look at the volume on chain, you look at the transactional volume, the users per day, the daily active users, and like, you look at the transaction volume and what gas prices are doing now with the improvements that have been made. And we're actually at all-time high in transaction volume. And, people are actively using Ethereum to settle their stuff.
The last question I have for you as we kind of wrap up here, as we've discussed quite a bit, and I do hear the same things in terms of grappling with the pessimistic and optimistic views of some of the AI dystopia or utopia that may be. But particularly, I'm sure that'll be a theme for this year's ETHDenver. But last, John, the thing that you're most excited about as you put the conference in, we're only a few weeks away now. What are you circling as things that you're excited about this ETHDenver?
I think that conversation is probably the most intriguing conversation that's been maybe had in my lifetime. So, the advent of non-AI slop tools that can actually advance human productivity and coordination in conjunction with Web3 tools is probably the most interesting and exciting proposition that I could think about. Because I've been saying it for years that this is inevitable. It just it hadn't manifested yet, I guess you could say. And now that it's manifesting, I'm a sponge. I'm thinking about chatbot security. I'm thinking about not chatbot, but AI agent bot security. Like, how do you preserve secrecy and privacy around all the access that you give it, right? I mean, there's a bunch of problems about that. There's a ton of things that, like, for me, make it probably the most important conversation that we could possibly have as humans.
Yeah.
To actually how to make that work for us on chain. Because if and I'll be a little bit drab for a second, if you don't mind, but the passage of the Genius Act in the spring of last year or summer, I thought was going to unlock a huge wave of innovation around decentralized applications for payments and things. But what it did was, because the regulatory rails are so sort of, they're required, right? And the compliance stuff is required. Anytime you say the words compliance and regulated, you end up with centralization. Okay, so the money, the VCs, by and large, that were in the sort of crypto native, cypherpunk, emergent order, decentralization pool, racing at who's going to win that, pivoted out, hard forked out into payments and fintech and modernization tools for RWAs on chain, stock markets, things that they're chasing dollars. And I get it. It's fine. It's in their nature to do that. But it kind of We were the cute girl at the dance, and we're not now. So the market, so there was a two-sided market happening where you had capital and builders getting together, doing crazy things, and that's what created. I mean, largely that's what created ETHDenver's trajectory.
Mm-hmm.
Well, half of that equation is gone. The capital is gone. It's gone for now. Okay, so will it come back? Well, capital always comes back where the opportunities are. Okay, so if we as a community remain focused on the things that we need to build and really take learning seriously from our previous chapters, because I think that by itself is very important, right?
Yeah.
We've got to learn. Okay, if we don't learn from our mistakes, we're going to be not any better than we have been. I mean, essentially, we have ourselves to blame or to thank for the reason why the capital pivoted. And I'm not judging it at all. I'm just saying it's natural market physics that the capital goes and looks for a new sort of place to park itself.
Yeah.
But the reality is the builder culture, the focus of the developers and the community building and all that had the pause button put on it. Okay. And a lot of people are very depressed by this. Okay. I'm not, because it's like, I look at it again, systems thinking. It's natural market behavior for these things to happen if the results aren't there.
Mm-hmm.
If the results were there, we would be doubling down and tripling down on it. And then it's just, the inertia just takes it into whatever it's going to be. Now we've got to kind of reset, which I think is the big thing. So, do I think Canton is going to be a thing? Well, there's going to be some corpo chain that's going to be a big thing. Okay.
Yeah.
And whether it's Canton or it's Tempo or it's Polygon or it's Stripe or not Stripe did Tempo, or it's Base or whomever, like, I don't know, Unichain, like, who knows, like, where people are going to migrate and who's going to win the corpo chain war. Okay. Because are we going to basically create a new regulated system for Swift? Yeah. Okay. That's all they're arguing over right now is who gets to be the new Swift, right? Because it's a new technology. It's cheaper to settle. It costs people less. It can settle 24 hours a day. It can have trustlessness baked into smart contracts, right?
Yeah.
So, like, those things all make sense, I mean, it makes perfect sense to me. But does it affect the average? Does it affect the average person?
And user
and user? No, it doesn't at all. Okay, so the promise that was Web3, if you want to go back to what I said, the capital hard forked out of Web3. And
I think it's been an interesting kind of thing to watch play out, certainly, as you said. If there are better returns elsewhere and kind of the ethos and upside of decentralization isn't being appreciated by the market, then what do you wind up with? And I guess that's an ongoing trend and an ongoing narrative that'll be here for the rest of 2026 and certainly into the future. But for now,
I think it will be. I think there's nothing going to get settled between now and whenever.
Yeah,
it's gonna. Things go in cycles, right? Now the hype cycles in crypto last about 12 to 18 months. So whether it was restaking, meme coins, NFTs, DeFi summer, ICOs, we're really good at creating variations of casinos.
And it sounds like you may be onto something with the AI agent being the next piece of this, but certainly I think we saw that play out last year, and it didn't really go anywhere, but it might have evolved.
Yeah, but I don't think AI agents are being positioned as casinos, though. I think that's the major difference here. Is like this is the first time we're actually talking about productivity gains in crypto. Up until now, blockchains are slow, they're expensive, and they're only as good as the code that's written on it. Okay, so they're dumb, slow, and expensive. Okay.
Yeah.
It's not cheaper, better, faster, okay? If AI is going to be applied to the concepts of Web3, and we can actually make it cheaper, better, faster, it's basic human behavior that they're going to adopt it.
Yeah.
Okay.
Well, I'm excited to kind of see what comes out.
I'm going to do it. So, like, if we can accelerate into that, and we can work around the corpo slop, okay?
Yeah.
Which is really largely what I think it is, okay? We should be excited about, and look, I hope none of my, Canton is a sponsor at ETHDenver, so I'm very grateful for their support. But do I think that the end goal is Canton? With respect, no, I don't think that that's the end goal. Do I think they have their own interests in the game and they're trying to capitalize on those interests? Yeah, sure. That's natural market physics. Okay. I'm okay with that. But
I think that's why I'm very intrigued to see kind of what happens in this year with Crypto Project of the Year, because it's been fun to see people voting on this too. And it's like camps from all over these ecosystems coming together to see which one's gaining potential here. And certainly on the ground, by the way, this time around as a media partner at ETHDenver, Coinage ourselves, very excited to have a front row seat for all of this and look forward to covering it too, John. But I can't thank you enough for coming on. And of course, as always, building alongside you as a legal DAO co-op here in the US. I think it's been fun to kind of chat about these things and hear your
The
takes
experiments
too.
are wildly cool and super fun. And look, we've all got to kind of do our own experiments to come up with these templates. And I think, if I were to put my finger on what's my goal, this trifecta that I framed out in the conversation here, my goal is to build the template that other people could replicate.
Yeah.
Because if you can, cooperatize, digital co-op any industry, we'll go pick one. Well, let's go do it. And you're doing media, I'm doing benefits in healthcare, and I'm doing events, and I'm doing like other things. And and we've got friends of ours, as you know, that are working on, user-owned sports teams and all this other fun stuff. I think anything consumer facing ultimately could be user-owned.
Yeah.
If you have the tools to operate it and to scale it sanely, right? With without too many bumper cars that break these things apart, which is why I think the genius of the C Corp is so important. How do we replicate the scalability of capital and accrual of value to an entity like we've done with a C Corp in the digital age? That's really the question.
And it's also, again, making sure that the market appreciates why those things matter as well. So that's why, we always love having you on to talk about these things, and we could talk for hours. But for now, I think we've got to leave it there. And again, excited to see what happens on the ground out at ETHDenver in just a couple weeks. But John Pollard, the founder of ETHDenver, can't thank you enough for coming on, man. Appreciate it. It's good to see you. We'll see you again soon.
See you.
Right on. Soon. That'll do it for us this time around on Coinage. For John and myself and for everybody here at Coinage. Again, of course, you can go to coinage.media to check out the biggest headlines around the world of Web3 and learn a bit more about not just our Crypto Project of the Year series, but also mint to co-own our community-owned media outlet built very much like SporkDAO and the team over there at ETHDenver, built as a co-op here in the US. For John, for myself, thank you again for tuning in. We'll see you again soon.